Hello everyone. Let's get the TSP all wrapped up. Let's get everything all in one nice package. Stand by. Hello everyone. It's time to take what we've learned and put it all together. Let's take what we've learned about the funds of the TSP and add a few things to it so that we can learn how to use the TSP, the Thrift Savings Plan, to the maximum advantage that we can. This is going to be a bit interesting for us because I'm having some sound issues, so let's just do the best we can. So let's move on. This will be a rapid fire episode because I've got a lot to cover and just the barest of notes, so we'll just do what we can in the time we have. So let's dive right in. Hello everyone, and welcome to another episode of the Reserve Military Retirement Radio program, where we cover military benefits in plain English. I'm your host, DJ, and as always, I will take the complex and make it understandable. This week, we are going to cover the last segment in the Thrift Savings Plan series. We're going to take what we've learned about the Thrift Savings Plan and add what you need in order to use the Thrift Savings Plan to its maximum advantage for you. So for the last 3 weeks, we have learned about the funds within the Thrift Savings Plan. Now we're going to take all those bits of knowledge and add to it all the ways that you can use the TSP to make it work for you. All those bits of trivia that are out there that can help you use the Thrift Savings Plan during your career and afterwards to make the TSP a valuable tool for you. There's a lot to cover, so I'm going to just cover the bare bones. Of course, there's a lot more that I'm going to have to leave out just for the sake of time, but there is always the Thrift Savings Plan website, tsp.gov, which has a wealth of knowledge for you. You can always refer to that as well. So let's just dive right in with the topic and carry on from there. So the first topic to cover is setting up a beneficiary for the Thrift Savings Plan. This is actually the first thing you should do when you establish an account. Once you have an account for yourself, you should go into the account and establish a beneficiary. This means that should something happen to you, you die, then someone gets the account, as part of your estate. This is something quite easy to do. It's just a form that you fill out. You should go to the Thrift Savings Plan website, tsp.gov, go to the Forms and Publications section, and download TSP form number 3. I'm not going to go into all the various fields and any of that. It's pretty self-explanatory. Just set up who you want to be a beneficiary should something happen to you, and send that to the TSP. This is just like setting up any other part of your estate when you're doing estate planning, like when you're setting up a life insurance policy or anything like that. This is just being a responsible adult. I know a lot of people don't like thinking about their own mortality, but this is something you should do. So go ahead and do that from the start and get that out of the way. This is what you should do before you even decide where you put your money. So it's out of the way. In fact, back in the dark ages when I first established my account, I was not even allowed to do anything as far as put my money where I wanted until I had established a beneficiary. Nowadays, it's a bit more automated and you're allowed to do X, Y, and Z, but I would say be an adult and do this step first. Just go ahead and knock it out. It's real easy, and you can do it in just a couple of minutes. So get that knocked out. So let's just say that's done and move on. Let's get on to what I call the fun stuff, because I like to think of money anyway. So let's talk about managing your contributions. Once you've actually got your account established, how do you manage your contributions to the Thrift Savings Plan? Well, first of all, how do you actually get them started? Well, if you're a currently serving member of the military, you start those contributions by going to the MyPay website. You actually just go into MyPay and click on the TSP section and determine what percentage of your base pay and bonuses and incentives and whatnot that you want to go into the Thrift Savings Plan. You just set a percentage. That's it. It's not a flat dollar amount or anything. It's just a percentage. You set a percentage that you want to go into the traditional or the Roth or both that you want to go into this. I prefer the Roth, but that's me. You can do what you want. So you set the percentages that you want, click submit, and it's done. And the next pay period, you'll see those deductions happen. You'll also get an email confirmation to whichever email you've established in the MyPay system, verifying that you've made those changes. And you should see those deductions happen in the next pay period, presuming that there's at least a week or so until that next pay period happens. So anyway, that's when the next deduction should occur. Now, what do you do next? Now, I know this is going fast, but I've got a lot to cover here, so forgive me. So now you want to actually determine where the money goes. Now we have to go to another website. Let's go to the TSP.gov website. Now we get to actually play with money. So we go to TSP.gov. This is going to take a week or so, maybe two, after you've actually done that transaction in MyPay, because you have to actually wait for TSP to send you a login ID and in a separate mailing a password, which is going to be just a temporary password. You'll establish a new one when you log in the first time. So you'll log into the TSP website, and once you've established a new password, you can manage your contributions. Now, there are two things that you have to do here. One is managing contributions for new allocations, new money coming into the site. That means every time you get paid, where does the new money go? And the second determination is, where does current money go? So if you already have money in the Thrift Savings Plan, where does it live? Where does it reside? And I'll get to that in a second. So first, let's talk about, where does the new money go? So let's just say that you want to put money in the C, S, and I funds, the Charlie, Sierra, and India funds. Then there's a wizard that you can use. It used to be that you do this paper-based, but now it's all web-based. You can do it very easily. You just go in and do this through a wizard. You tell the site which percentage of your money, of your new allocation, your new contributions you want to go into each of these funds. And it will not let you go above or below 100%. A nice check on the numbers there. And you just tell it you want, let's say, 25, 50, and 25 to go into these new funds, and then click submit, and all future deposits made into the TSP will go into those funds. So nice and simple there. But let's say that you already had money in the TSP, and all of that was in, let's just say, for example, the G fund, and you want to do what's called an inter-fund transfer into, let's just say, the C fund. Well, you can do an inter-fund transfer into something else, and that's pretty simple as well. So you just choose the interfund transfer option. And again, I know I'm going quickly, but we don't have a lot of time to cover everything I've got in my notes here. So we're going to go quickly. So you do the interfund transfer. You choose that you want 100% of your funds to go from G into C, and click submit. And on the next trading day, all of your money will transfer. Now, you don't have to do 100%. You can split it up between various funds if you choose, and that's your option. Now, one thing to keep in mind is if you do have money in a traditional fund, it has to stay in traditional. You cannot transfer from traditional into Roth or Roth into traditional. It has to stay within the same kind of qualified plan. And if I'm going over your head there, don't worry about it. The site will manage that kind of thing for you. So it's not going to let you make that kind of mistake. So don't worry about making errors of that kind. So let's move on. So one thing to keep in mind, and I may have alluded to this in previous episodes, is there is a limit to how much money you can contribute to the Thrift Savings Plan every year. Most people who are in a reserve component are not going to get anywhere close to this limit while they are serving unless they are heavily contributing from a civilian job or they are on active duty and heavily contributing in that way. But it's still good to keep this in mind. The annual limit for contributions to the Thrift Savings Plan for 2018 is $18,500 per year. Now, keep this in mind. There is another limit. If you have employer matching or you do rollovers or other types of contributions, then there are other limits that apply. The maximum that can be applied to your account, and this is including from other sources like rollovers and whatnot, the maximum that can be applied to your account every year is $55,000. And we're not going to get into funky stuff. I'm not going to go into all the details there because we could be here for hours. I don't want to be here for hours. And I'm not a financial advisor, so we don't want to get bogged down into those details right now. So what most of us need to know is $18,500 is the limit. And you only really need to know that if you are contributing from other sources. So let's say you have a civilian job and you're contributing to a 401k, then you need to keep in mind how much you're contributing from that source and make sure that the combined total of your 401k and TSP contributions do not exceed the $18,500. So keep that in mind and you're safe. All right. Now, for us old people, and well, I'm not to that point yet, but this is still something good to keep in mind. For people 50 and over, there is a provision for additional contributions. It's called a catch-up contribution. You are allowed an additional $6,000 every year to catch up. That's hence the name. You have to have already contributed the maximum $18,500 in order to do this. So just keep that in mind as well. You can then contribute an additional $6,000 for the year. Make sure you do not go over it. There are some penalties if you do. And just keep things in carefully managed, and you should be fine. I'll post some information in the show notes so that you can be carefully informed and be able to manage this properly. We have a few more items before we close up shop for today. We have Some possibilities for improving the overall balance of the TSP. You have the option for rollovers, hiccups. You have the option for rollovers into the TSP from other accounts. So if you have, let's say, 401ks or IRAs from other jobs, and you want to simplify all of your other accounts and make your money management a little easier, then you can roll them over into the TSP. Not only does this make life a bit easier, but it could also reduce the administrative costs. As I've mentioned in a previous episode, the costs of having the TSP are significantly lower than they are for a lot of civilian accounts. So having a TSP account is much cheaper and, of course, managing it a lot easier than a lot of civilian accounts would be. The paperwork is quite simple. I'm going to post links to the paperwork you would need in the show notes for this episode. Again, it is quite easy. It's one form, separate pages, but it's one form. The forms are different based on whether it's a traditional or a Roth TSP. Just keep that in mind. But again, if you wish to do this, it is a good idea to do so just for the simplification aspect. Now, when you get to the end of your career, moving on, by the way, when you get to the end of your career, you do have some options. You can either do a full withdrawal of your TSP, which, if you do so, there may be some tax implications based on your age. If you're 59 and a half, then there may be fewer tax implications, because 59 and a half is when you have the least tax implications. But full withdrawal might not be the best idea, so I'm not going to talk about that. If you have multiple accounts, like if you are a civilian employee, civilian federal employee, and a military employee, when you leave one service, let's say you leave military service, but you're still a civilian employee, you actually have the option of combining your two accounts. I won't go into the specifics of that. I'll say, having done it once myself, it's quite easy. Again, it's one form. I'll put a link to that in the show notes. It takes a week or so to do, but again, it's quite simple. Once you hit 59 and a half, actually it could be sooner, one option you have with the Thrift Savings Plan is you can convert it to a Thrift Savings Plan annuity. This means you convert it into a type of account that begins to pay you an amount on a monthly basis until the end of your life. There are several options for this. Again, just for the sake of time, I'm not going to go into all the specifics. I'm actually going to just refer you to the TSP website for specifics on that, but you can convert your total balance or partial balance into a stream of income that pays you for the remainder of your life. So that could be something of great interest to you later on. Lastly, well, I was going to say lastly was the full withdrawal, but I've already mentioned that. I would not recommend the full withdrawal unless you're going to do so for the sake of turning it into an annuity in some other form, or rolling it into some other tax-protected form. If you're just withdrawing it fully, there are normally going to be a host of tax implications that could be quite ugly, particularly if you have the traditional TSP, and you certainly don't want to face that when you are at the end of your career. If you have a Roth TSP, then you'll have fewer tax implications, but even then, you could face some tax implications because any matching funds you may have had would have gone into a traditional account, and there would be tax implications for that. So keep that in mind, and I would recommend that you talk with a financial professional before making any decisions regarding a full withdrawal of your Thrift Savings Plan account. And of course, that's enough for this week. If you have not already subscribed to this channel, then please click on the RC Retirement link at the bottom of the screen and join this audience fully. If you are not a subscriber to the podcast, then please go to iTunes or Stitcher or whatever podcast medium you prefer and join in that way. I would greatly appreciate your doing so. Any method that you use to consume this information is, of course, appreciated. And I also welcome whatever feedback, as I bang stuff on my desk here, any method that you would prefer to send feedback, questions, comments, concerns would be appreciated. Please send any email you may have to dj@rcretirement.com. Also, I have a SpeakPipe widget on the website. I do ask that you send an email address with your SpeakPipe messages. One of the most recent messages I got on SpeakPipe simply said, "Please call me," and I do have to apologize that I'm sorry, I'm not a phone service. So I do occasionally call people, yes I do, but I'm not always going to do that. I do prefer to answer by way of email or by making video episodes in response to these messages. So if you would please include an email address so that I can either send you a message or most likely send or rather make a video in regard to your message. So the more information you can include in your message, the better. In fact, one of the more recent messages I got was only 20 seconds long, and most of it was just, "Here's my phone number, please call me, here's my name," and I was sitting here thinking, now what? So, yes, please give me as much info as you can, and I'll do my best to assist, but I can't always guarantee that I'm going to call, so please help me out. All right, so please join me next week, and I do have to apologize for the lateness of some of my episodes lately. I've been battling some migraines, and they have kept me, in a dark room, battling that, and under the influence of a lot of drugs. So please forgive me for that. And hopefully in the future I won't have to worry about that, at least not as often. All right, so until next week, hopefully we will see each other more often. Thank you for being a part of this audience, and of course, thank you for your service. Have a great day.
If you liked what you heard on today's episode, then please go below and give it a thumbs up, and be sure to subscribe to this channel. Also, please let other people know about this channel and the information it can provide for them. If you have questions or comments, then have no qualms about posting them in the comments section below. Please remember the RC Retirement YouTube channel and the RC Retirement website are not recognized or endorsed by the Department of Defense, the Department of Veterans Affairs, or any other government agency. The information presented in these resources are for entertainment and informational purposes only. Also, the content of either of these resources should not be considered financial or legal advice. Please consult with your own legal counsel, accountant, and financial planner before making any decisions based on what you have learned here. As always, thank you for watching the RC Retirement YouTube channel.